Gold prices continued their historic advance on Thursday, moving closer to delivering their strongest monthly performance in more than 5 decades, while silver surged to unprecedented levels, above $120 per ounce. The sharp moves across precious metals unfolded as investors responded to rising economic and geopolitical uncertainty, increasing demand for assets traditionally viewed as safe havens during periods of instability. By mid-morning trading in the United States, spot gold had extended its record-breaking rally, posting a gain of more than 2% on the day. Prices reached $5,514.03 per ounce by 8:52 a.m. Eastern Time, after earlier touching an intraday peak of $5,594.82. The metal's strong performance places it on track for its best monthly gain since 1973, with gold up more than 28%. So far this month, the surge reflects a widening base of demand for gold, as participation stretches across multiple segments of the global financial system. Market interest has expanded beyond traditional investors to include institutions and corporate entities, highlighting the growing prominence of precious metals during the current period of uncertainty. Market participants point to the visibility of gold and other metals, noting that investors tend to move toward assets that have recently delivered strong returns. Developments during the week further underscored this trend. On Wednesday, the chief executive of cryptocurrency group Tether announced that the company plans to allocate between 10 and 15% of its investment portfolio to physical gold. At the same time, holdings in the world's largest gold-backed exchange-traded fund, SPDR Gold Trust, rose to their highest level in nearly 4 years, signaling renewed interest from large-scale investors. Geopolitical tensions also played a role in shaping market sentiment. On Wednesday, United States President Donald Trump urged Iran to enter negotiations over its nuclear program. In response, Tehran issued threats of retaliation against the United States, Israel, and their allies. These developments added another layer of uncertainty to an already volatile global environment, reinforcing the appeal of assets perceived as stores of value. Monetary policy decisions in the United States added to investor focus. The U.S. Federal Reserve announced on Wednesday that it would leave interest rates unchanged. Market attention now centers on President Trump's forthcoming announcement regarding a replacement for Federal Reserve Chair Jerome Powell, whose term is scheduled to end in May. Expectations in financial markets currently point toward a potential rate cut by the central bank in June, though no changes were announced. At this week's meeting, while gold captured headlines with its historic monthly trajectory, silver delivered its own dramatic performance. Spot silver climbed more than 2% on the day, trading at $119.24 per ounce after reaching a record high of $120.44 earlier in the session. The metal has surged nearly 64% so far this year, marking one of the strongest performances among major commodities. The rally in silver has been driven by a combination of supply deficits and momentum-based buying, factors that have amplified price movements in a relatively small market. Analysts note that the size of the silver market, along with platinum and palladium, makes it more susceptible to speculative inflows when compared with larger markets, such as gold or major equity indices. These inflows have contributed to sharp price increases that some market observers describe as disconnected from underlying physical demand. Activity in other precious metals reflected similar dynamics. Spot platinum advanced more than 3% to trade at $2,782.54 per ounce. Earlier in the week, platinum reached a record high of $2,918.80. Palladium prices also edged higher, rising 0.2% to $2,077.83 per ounce. Taken together, the movements across gold, silver, platinum, and palladium illustrate the intensity of current market conditions. Gold's approach toward its strongest monthly gain in over 50 years stands out as a defining feature of January trading, while silver's breach of the $120 level marks a historic milestone for the metal. These price actions are unfolding against a backdrop of economic uncertainty, geopolitical tension, shifting investment strategies, and closely watched central bank decisions. As markets digest these developments, attention remains focused on how widening demand, institutional participation, and global events are intersecting to drive unprecedented price behavior in the precious metals sector. The first half of today's report has outlined the key movements and immediate factors shaping the market landscape. In the next part, we will continue with a closer examination of the detailed drivers behind these price surges and the broader market dynamics reflected in the latest trading data. The scale and pace of the recent movement in gold prices has drawn attention across global financial markets, particularly as January approaches its close. Gold's advance on Thursday represented not just another daily gain, but part of a broader monthly rally that has positioned the metal for its strongest performance since 1973. With spot prices climbing more than 28% over the course of the month, the current trajectory marks a significant chapter in gold's long trading history. During Thursday's session, spot gold registered a gain of 2.1%, reaching $5,514.03 per ounce by 8:52 a.m. Eastern Time. Earlier in the trading day, prices touched $5,594.82, setting yet another intraday record before easing slightly. These price levels reflect sustained buying interest rather than short-lived volatility, indicating a consistent flow of capital into the market throughout the month. Market participants have pointed to a broadening base of buyers as a defining feature of this rally. Interest in gold has expanded beyond traditional safe haven investors to include participants from diverse segments of the financial system. This widening demand has helped maintain upward momentum, even as prices reached successive record highs. According to industry commentary cited in the report, precious metals have remained highly visible in the current environment, and investors have continued to gravitate toward assets that have demonstrated strong returns. One notable example of this expanding interest emerged from the cryptocurrency sector. On Wednesday, the chief executive of crypto group Tether stated that the company intends to allocate between 10 and 15% of its investment portfolio to physical gold. This announcement highlighted a shift in asset allocation strategy and underscored the appeal of gold beyond conventional financial institutions. The decision also illustrated how entities operating in digital asset markets are increasingly incorporating physical commodities into their investment frameworks. At the institutional level, investment activity was also evident in exchange-traded products tied to gold. The SPDR Gold Trust, the world's largest gold-backed exchange-traded fund, reported holdings at a nearly 4-year high. This development indicated renewed inflows from large investors seeking exposure to the metal. Rising holdings in such funds are often interpreted as a signal of sustained institutional interest, reinforcing the narrative of broad-based demand supporting gold's rally. Alongside investment flows, geopolitical developments continued to shape market sentiment. On Wednesday, United States President Donald Trump called on Iran to negotiate a nuclear deal, a move that drew immediate attention from global markets. In response, Tehran issued threats of retaliation directed at the United States, Israel, and allied nations. These exchanges added to existing geopolitical tensions and contributed to an atmosphere of uncertainty that has historically supported demand for safe haven assets such as gold. Economic policy developments in the United States further influenced investor behavior. The U.S. Federal Reserve announced on Wednesday that it would maintain its current interest rate levels, opting not to make any changes at this meeting. This decision aligned with expectations, but did little to diminish market focus on the central bank's future direction. Investors are now closely watching for President Trump's upcoming announcement regarding a replacement for Federal Reserve Chair Jerome Powell, whose term is set to conclude in May. Market expectations currently suggest that the Federal Reserve may implement its next interest rate cut in June. While no action was taken this week, anticipation surrounding future policy moves has remained a key factor in shaping market positioning. Interest rate expectations often play an important role in gold pricing, as changes in borrowing costs and currency valuations can influence the relative attractiveness of non-yielding assets. As gold dominated headlines with its historic monthly performance, silver emerged as another focal point in the precious metals complex. Spot silver advanced 2.3% on Thursday, trading at $119.24 per ounce after earlier reaching a record high of $120.44. This milestone marked a significant moment for the silver market, placing prices at levels not previously seen. Silver's performance over the year has been particularly striking. The metal has risen nearly 64% so far this year, reflecting strong upward momentum. According to the report, this surge has been fueled by supply deficits as well as momentum-driven buying. These factors have combined to accelerate price gains, particularly in a market that is smaller and less liquid than gold. Analysts have noted that the relative size of the silver, platinum, and palladium markets makes them more vulnerable to speculative inflows. Compared with larger markets such as gold or major equity benchmarks like the S&P 500, these metals can experience sharper price movements when capital flows increase rapidly. As a result, prices can move to levels that some observers describe as detached from areas where physical demand is strongest. This dynamic was evident not only in silver but also across other precious metals during the week. Spot platinum climbed 3.2% to $2,782.54 per ounce. Earlier in the week, platinum reached a record high of $2,918.80, highlighting the intensity of recent buying activity. Palladium also recorded gains, with prices rising 0.2% to $2,077.83 per ounce. Together, these movements underscore a period of exceptional activity across the precious metals spectrum. Gold's sustained rally, silver's record-breaking surge, and strong gains in platinum and palladium reflect a market environment shaped by uncertainty, shifting investment strategies, and heightened sensitivity to economic and geopolitical signals. As trading continues, these factors remain central to understanding the forces driving current price levels. In the next part of this report, we will continue examining the remaining developments outlined in the article, focusing further on market structure, investor behavior, and how these elements have combined to produce one of the most remarkable periods for precious metals in recent history.